Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Pat, how's it going?
Good. How are you this morning, Mike?
We're doing really good. Let's talk about the hog market here a little bit. Just a quick overview for everyone listening. We're meeting here on Tuesday, mid-morning. We're going to be talking about the hog market. We're going to start off with some technicals first, and then we're going to dive into some more fundamentals here. But it's been a fun chart here recently, looking at a lot of the commodities, Pat. It seems like hogs have been somewhat insulated compared to some of the other commodities. What do you think about the technicals right now?
Yeah, a lot of volatility in the outside markets, as you mentioned. Crazy movement in that crude oil complex Sunday night through Monday here, and as a result of that, we've seen a little bit lower beef prices. Some concern about what's going on in Greeley, Colorado, sort of adding to all of that. And the hog complex got sucked into that a little bit on Monday, but a nice little rebound here this morning. Nice strength and cutout values yesterday morning and afternoon, certainly providing support in the lean hog complex. And from a technical perspective, we do have, I guess, the April chart pulled up here, but it's there's a little bit of gap up there towards the top end of this trading range, and maybe there's an opportunity for us to go back and challenge that here. But Mike, with 5 weeks left, we're going to be more tied to what's going on with the index and with cutout trade here as we go. And so far, we're seeing a nice, steady appreciation in index numbers here. We're going to have some firmer cash this week, but all in all, spot fundamentals continue to be pretty solid.
What's the future outlook look like here with isoine prices?
Well, we've got that's a little bit of a change here over the last couple of weeks. I think the last time that I ever had the opportunity to visit with you on this podcast, we were talking about how we had space chasing baby pigs a little bit. That seems to be flipping some, and we want to be pretty cautious and careful about making that observation. But, as we're looking at this futures market opportunity 6 months out here, of course, we're into a declining, depreciating market is just from a seasonal perspective. But we've also seen the expected correction in isoine values and maybe just a little bit more readily available. And so a whole lot of discussion in the industry as we we're at Pork Forum last week, and the state shows the month or so preceding that, as it relates to the health challenges in the industry, as it relates to the supply side, relatively tight economics here, and then the corresponding higher isoine values as a result. And that does seem to be calming down just a little bit, and maybe a little bit more than what you would expect from a seasonal perspective.
Current numbers running really close on market hog harvest here, close to last year's levels. How is that versus expectations? You think?
Well, we had over 100,000, 108,000 harvested last Saturday, so a pretty good Saturday harvest there. Took last week's harvest rates up to just short of 2.5 million. A slight decline from the week prior, but a little bit of an increase from a year ago. And so the amount, and then you couple that with what's going on with weights here, we're getting plenty of pork production onto the market relative to expectations and relative to a year ago. And cutout values, and we can move on to that, are certainly being supported rather well. Now, one of the things that we're looking at and talking about as we get into this next week and the week after here is the relatively wide premium that April futures, just 5 weeks from expiration, is carrying to an index that, from a historical perspective, this time of year can be pretty flat. Right, and we've also talked about that quite a bit here in the last month or so. But just it does. The spot fundamentals are good, but the futures market is showing a fair bit of optimism relative to those spot fundamentals. And we've also now moved those summer markets back to some of our old highs. We've recently seen December 26 pigs and that Q4 forward opportunity rival the best numbers that we've seen. continue to see expanded opportunities for crush, in that deferred time slot, Mike. And so, it's a real nice opportunity. Let's talk about grains here just a little bit while we're talking about hog crush. And so, we have seen a little bit of a pop up here in what's going on in the corn and meal complex in particular. You want to make a few observations just as relates to what's going on supply side fundamentals?
For sure. The grain markets as of late, like a lot of these commodities, have been getting pushed around mainly by the inflation hedge story. I mean, we're buying crude oil. Now, corn and soybeans are probably more attached to crude oil than it's ever been. The last time we started wars in the Middle East, things like ethanol and biofuels really weren't a thing at that point in the early 2000s yet. And it was right after that we started to become more self-sufficient in the energy space. And now we produce like 22% of the world's crude oil supply. We're the largest producer in the world. We're very self-sufficient. We export energy now. So when it comes to corn and soybeans, we're very, very tied closely to
sorry to
crude
interrupt
oil.
you here, Mike, but just not only is the grains complex more tied to the energy complex than what it was back in '08, but also this recent growth phenomenon, and you were educating me on this topic last week of, renewable diesel is much easier to slide into the diesel fuel supply than what ethanol ever was and even is to this day. Is that statement accurate?
Correct. It's the same molecule as diesel. You can't even tell under a microscope. So there's no barriers, and they don't have any max on it either. So California is up to 75% of the diesel they use as biofuel or renewable diesel, Pat.
That's right. And so that connection is even stronger tied, right? The relationship between soybeans and crude oil.
And they can flex into a lot more of that demand too. It's pretty easy for them to do that. We're in the growth mode of that as well. A lot of plants are coming online. You sent me something this morning about one going up by Grand Forks, I believe. So
I wouldn't be surprised if there isn't a pipeline right underneath where that plant is being constructed, right?
It seems like it. So this grain space has been impacted very heavily compared to the other ag commodities by this war so far. Corn, given just where managed money is, they could add a lot more contracts on in this corn space still. Soybeans were nearing a record, so we'll see if that starts to become a little bit of a cap. But both wheat and corn have some room to go if the funds really wanted to pile into this thing.
Right.
Especially before, adding weather premium and all those things. But WASD Airport here and probably not trading a whole lot of fundamentals lately, so we'll see if we get to do some of that.
Yeah,
here
we
this
might
week.
get tied back into that just a little bit, and just a little bit intermediate to longer term as it relates to energy and commodities, corn and soybeans in particular. The Trump administration is going to be fairly strongly motivated to try to keep these oil prices in check. Having some economic activity challenges going into midterms is certainly not on their wish list by any stretch of the imagination, right? And so, there's a likely we experienced it yesterday, right? Crude traded up to 120 and then back down to $90 as we started to talk about releasing strategic reserves and those sorts of things.
Talk about the importance of working orders over the last 24 hours, because a lot of these moves are happening at midnight too. Corn traded 2 cents from $5 yesterday. So crude oil bounced right up to that, resistance line from all the way back to '08 and 22. So just a little snip of a reminder for how important working orders are.
Great point. And that's why, right, when we have the opportunity to sit down with our clients and work through the strategic plan week over week, month over month, it always includes firm offers, working orders in order to execute not only when we have this type of volatility in the markets, but also to some extent to save ourselves from ourselves, right? It gets a little bit tough to make that decision.
For sure. Any final thoughts for our listeners?
Well, I just in general, first of all, thank you. Thanks for the opportunity to engage with everyone, over the last 4 or 5 weeks or so. It's been great traveling around and looking forward to a trip to the Eastern Corn Belt here shortly and to get in front of a few more folks here. But thanks for that opportunity. Thanks for the opportunity to work with our customers and looking forward to taking advantage of the opportunities this market is presenting for us.
It is presentation time of the year. I think you and I both, we got Illinois, Ohio, Missouri, just by the end of this week, Pat.
You're busy 3 days.
Yeah,
4
it
days.
is.
Yeah,
All right,
indeed.
looking forward to it.
Thank you.